What's up everybody, welcome back to Earn It, Save It, Invest It. In this video, I'm going to quickly go over why I think Palantir is going to go to a $100 stock by next year. So right now it's around 150, so go ahead and give a like and subscribe really quick if you do like my stuff. And yeah, I'm going to go over really quick in about 5 to 10 minutes on why I think Palantir is going to go from $154 to $100, and it's kind of just simple math. So I'm going to break it down really quickly. Here we go. So Palantir right now is at $154, right? It's at $154. Now there's all different kinds of people. You got a hold, you got a strong sell, strong buy, strong sell. It's all over the place, right? Palantir currently has an earnings per share of 72 cents, and its PE, forward PE, is 213, which is pretty insane. So if you look at Palantir, it is currently the 29th most valuable company in the world, right? I mean, we're talking China, France, we got Netherlands, everywhere, right? It is 29th in the world in terms of how much this company is worth. It's worth $369 billion. So what I did was I said, all right, well, first, what we should do is we should compare it, right? We should compare it, right? We should compare it to other companies around that, right? So let's say Palantir, I did it from the companies just under it. So we got Procter & Gamble, we got Home Depot, AMD, Coca-Cola, and General Electric, right? I also added in Salesforce, which is what, 73, because they are a software company that also will be using a lot of AI and stuff, right? It's not necessarily the same company in any terms, but it's a lot more similar than a Home Depot or an AMD or a Coca-Cola, right? Those companies are not like Palantir in so many different aspects. So because of that, I did add Salesforce into this comparison, right? So we got Palantir, Procter & Gamble, Home Depot, AMD, Coca-Cola, General Electric, Salesforce. Now what I want to do is line them all up and say, does Palantir belong? Does it belong in this realm of $154, right? Salesforce is worth at 73, 217, right? So if Palantir is worth 369 to go to 217, you're talking, you're losing about a third of your market cap, right? And going from 150 to 100 would be losing a third of your market cap, right? So does Palantir actually, should it belong closer to a Salesforce, right? Does Palantir and Salesforce numbers, do they kind of match up similarly? So we're going to go over that. So I did Palantir versus them all. Now, if we do the stock charts, of course, Palantir is just going to kill everybody. There's no even reason to look at that. We got all these grades. This is Seeking Alpha. There's all different kinds of grades for these stocks. I don't really need to get into them. Of course, the valuation's an F because it's insane, but it's growth, profitability. I don't even know why it's not an A+. So let's just go into the nitty-gritty. Valuation, right? 213 forward PE. Everyone else, look at everyone else. It's 21, 23, 51, 24, 46, and 20. Salesforce is at 20. Salesforce is actually the lowest out of all of them, right? So Palantir right now, if you buy right now, you're buying at a premium. You think that this thing has to grow significantly, because if it just grows into what it is today, I mean, that could take a while, right? If you're thinking it has to grow into something way bigger for you to, if you're buying right now, right? So we're just going to go over those numbers. The growth, obviously, we know the revenue growth year over year, 47%. That's great. Where look at these other ones. We have 1.23%. We have a 7%, almost 32%, a 3% almost. 17, and then an 8%, right? The Salesforce is not nearly growing their revenues as much. Now, one thing you do want to think about, though, is let's say someone has $11, right? Or let's just say you have two people. You have one person who says, I went up 100%. You have another person who says, I went up 10%. You're probably going to think the person who went up 100% got more. But if the person that went up 100% only had $1 to start with, and the person who went up 10% had $11 to start with, technically the person with $11 performed better. Even though it was a way less percentage, that 10% got them $1.10, where that person's 100% only got them $1. Now, obviously, if you were to replicate that 100% over and over and over and over and over, then you're going to make a lot more money. The point is, though, when you become a bigger company, it's a lot harder to grow at those rates. So we have to keep that in mind that, you know, these companies, when we actually look at how much they're making, it's the reason why their revenue growths are not nearly as big is because it's just so hard to grow, right? Like Facebook, right? How many people, Meta, right? Facebook, Instagram, all that stuff, they have billions and billions of people on the planet that use their product. They can't grow that much. They literally cannot grow 100%. It's impossible for Meta to grow, for their family of apps, right, to grow 100% total in the terms of like a Facebook, right? When you have over half of the world using your product, it's impossible to grow 100%. But you are still way ahead of everybody else when you have half the world using your product. So just keep that in mind when we're thinking about these growths and all these different, percentages, and we're looking back. Palantir, what you're going to see is not making nearly as much money in total. Even though the growth rates are ridiculous, they have to keep that up. So the revenue growth obviously whoops everybody, right? Profitability, their gross profit margin is 80% compared to a 51, a 33, a 51, a 61, a 32, and a 77. Someone is pretty close, right? Salesforce is pretty close in their gross profit, right? But how much net income, what's the net income margin, right? You got 28, 19, 8, 10, 27, 18, and 16. So we actually have Coca-Cola, who's fairly comparable, a Procter & Gamble who's fairly comparable, right? But they also have a lot of other things that they have to do with their money. I'm not going to go into, but this one thing that does scare me, besides any other kind of financial numbers and business and economics, is how much of Palantir, right? Look at this. 7.5% are insiders, right? They have insider shares are at 177 million, which is crazy on how much those people can just flip it. They've profited so much. At any point, they could say, you know what? I think I'm done. I'm done with the company. I want to sell my shares, right? And you look at everyone else, right? The closest is 2.5%. That's, 3 times less, or I guess Palantir is 3 times more than what Salesforce is in terms of the insider percentage of people who own shares. So the insiders, the people, the employees at Palantir, have a lot of power in that stock, in the stock price, in terms of if they decide to sell. This is just the performance. Let's not even look at it, right? Palantir is going to whoop everybody. I mean, look at this 3-year at 2,000%. I'm getting a little dizzy. That's pretty crazy. The risk, there's some short, obviously Palantir has been growing so high with their stock price and everything. So the short interest has gone up tremendously. AMD actually has a little bit more, which is pretty interesting. Now we're going to go over the revenue. This is one of the big parts about it. The revenue is at 3.9 billion, let's say 4 billion. Procter & Gamble's at almost 85 billion. Home Depot's at 166 billion. AMD's at 32 billion. Coca-Cola's at 47. General Electric at 44. And Salesforce at 39. Right? Let me put this big screen for you. Right? So you look at these numbers, and Palantir is not doing nearly as much as these guys in terms of how much revenue. Right? Now let's look at the net income. They're making 1.1 billion. Now, when we're talking about, the net income available to the common shareholders, right? This is our number. It's going to be the same as up here, basically. The net income, when you look at it percentage-wise, is absolutely amazing. But when you look at the total number, I mean, Procter & Gamble makes $16 billion. Home Depot makes $14.5 billion. AMD makes $3 billion. Coca-Cola, $13 billion. General Electric, $8 billion. Salesforce at $6 billion. I mean, everyone makes a minimum of 3 times more in terms of net income, not percentage-wise, but just in terms of straight dollar amount, at least 3 times, all the way up to 16 times, or let's say 15 times, right? Procter & Gamble makes 15 times the amount of profits in terms of the cash than Palantir does, right? And yet Palantir is worth more. That to me just doesn't make sense. That to me just doesn't make any sense. And I understand that Palantir can, if they continue this, but I'm gonna go over some other stuff really quick to show you where exactly and why I think it's gonna be at basically $100 next year. So Palantir, the total cash, this is the balance sheet, $6.4 billion. Now, when you look at their balance sheet, is probably one of the better ones in total, right? You talk about they have total cash $6.4 billion, total debt only $235 million. That is insane, right? Look at everyone else; they're underwater. AMD, no, but everyone else, Salesforce is not either. But Procter and Gamble, $11 billion, and then they have $36 billion in debt, right? So the balance sheet also is one of their prized possessions, because they are way better than their net debt is negative 6.2, right? That means they have a surplus of over 6 billion ready in cash, whereas then everyone else is in complete debt, basically. I mean, they have a 3 billion, they're both at 3 billion, right? But you have $32 billion in terms of difference between of cash and debt. It's not assets, but it's still just something to keep in mind. And then we have the cash flow, operating cash flow. Again, it's going to be just significantly less than everybody else, right? Capital expenditures, way significantly less than other ones, right? I mean, you're talking almost 4 billion compared to 23 million, right? So there is big differences on how these companies perform and how they operate and what they're doing, right? So I'm going to go to, here it is. I'm going to go to the seasonality for Palantir. Now, if you look at the seasonality, I zoom out even more. Right, here we go. We're looking at December. We're close to December. And December is one of their worst months. In fact, it is, along with April, their worst month out of the last, 4 years that we have, about 5 years that we have been keeping track, or at least Seeking Alpha has been keeping track of their performance per month. So December is their worst month, and we have to keep that in mind. That has nothing to do actually with why I'm saying it's going to be $100 though. The revenue continues to go up, and it will continue to go up. Earnings per share going up will continue to go up. This right here is if they at all get close to this. If they come close to this, right? If they come close to this 99 cents, let's say it's $1 on the dot, right? If it's $1, right? Now let's say that next year we kind of get a little bit of like, not a reset in the stock market or anything, but we get a more of a reality check. If Palantir gets a reality check, let's say Palantir goes to 100 PE, right? It should not be at a 200, 150 PE. Let's say it goes to 100 PE, right? 100 or so. If it's at 100 PE and its earnings per share are $1, that means it's going to be at $1, or I mean $100, right? 100 times $1 is $100. So I think in 2026 at some point, Palantir will hit $100. It's going to hit $100, and of course they could beat their earnings, and the EPS could be maybe 120, right? And let's say they have a earnings per share of 110 or 100. I mean, it's not going to be necessarily that much more than what it is today, right? Even if it were to completely blow out the earnings per share and all that, that PE has to continue to go up or stick, right? Like the 200 PE has to continue being a 200 PE, so the stock will have to continue to grow, obviously. But I just think eventually it's going to come back to a reality. It has to come back to around 150 to 100 PE, and if we're talking 100, price, price to earnings, and it's making 100 or making $1. Next year, 100 times $1 is going to be $100. So Palantir, in my opinion, is going to at least touch the $100 mark in 2026. I'm not saying it's going to stay there, but I think it can actually touch the $100 mark and then continue to go up. I think fair value at this point will be, at least next year, is going to be somewhere between 100 and 150. Somewhere, I don't know exactly, right? I want to see their numbers again and see, can they continue to grow? Like, if they can continue to grow like this quarter after quarter, if they do this, if they do their fourth quarter of this year and their first quarter of next year, the next 2 quarters, and they're still growing in the way that they are growing, then it's like, okay, that PE could just stick. They could just keep going and sticking to 200s and stuff, because people are going to be willing to pay for it. But once those numbers show any kind of little cracks and oh wait, maybe they can't grow that much, because again, they're going to have to grow at such a significant rate to get to what these other companies are making, right? They're going to have to grow their revenues by hundreds of percent, 200, 300, 400%, 500, 600%. Just to get to these other companies. Now, granted, their profits are better, but how are they going to grow their revenue that much, right? So you really have to think about that. And how long will it take, right? No one's saying that Palantir can't grow to those valuations or those dollar amounts in terms of revenue and everything, but how long will that take? They're not going to do that right now. It's not going to be, 1 year, now we've tripled in our revenue. That's not going to happen. But yet their business is being placed with other businesses and companies that make triple, quadruple, 6, 7, 8 times more than what they do. So it's going to be very interesting on how the market handles Palantir, because I personally believe in the company. I believe in the product. I've seen what they've done. I think it's going to be a great thing for many, many businesses in many years to come. But in terms of an investment in stock price, I just don't see it happening, growing. I mean, again, if they do start growing, the rates are growing and the people still buy into it. But eventually those growth rates are going to stall a little bit. They're going to start to pull back. It doesn't mean that they're going to go negative. It just means the 40, 50, and 60s are then going to be 10, 20s, and 30s and stuff like that. And then people will freak out. And that's the thing, is that it's not like this, if they had a way lower PE, then it'd be okay, if their growth rate started to slow down a little bit, the stock won't crash too much. But because it's at such a high PE, people will freak out and sell the living out of it, right? So it will crash, and it'll crash hard. This thing could easily crash 50, 60% from where it is now. So if people decide, I don't want to be a part of this anymore, growth rates are not what I think it's actually going to be, I think other people are going to sell, so I'm going to sell. And once that selling pressure hits on something with such a high PE ratio, it's going to get hit hard. So that's just my 2 cents, or my 99 cents, 100 cents, whatever it is, right? But again, their earnings per share estimate next year is 99. And if they're at 100, PE ratio, I mean, you're talking $100. So, thank you for watching. Please give a like and subscribe. It was definitely more than what I thought. It was 20 minutes. If you're still watching, I really appreciate it. Actually, you know what? I did want to go over the really quick, just to look at this chart. If it goes to $100, you have to remember this thing in 2023, anywhere at some point right here. If it goes to $100, it is still up 1,100%. 1,100% within 3 years. Oh, it's May to May. Wow, I didn't even mean to do it like that. But that was May to May. Within 2 years, almost exactly. 1,100%. If this thing stuck to 100 for 2 more years, right? Let's say you got, well, where are we? We're in 2023, so we go to 2027, May 2027, right? $100 right there, basically. If I said you gained $1,000 or 1,100% on an investment over 4 years, yeah, heck yeah, I'll do that for sure. So that does mean Palantir over the next 556 days could technically go 35%. Now, it doesn't mean that people are going, oh, I'm not even showing that, right? Look at this, right? Over the next 4 years, 4 years total, right? So over the next 2 years, we go, it was at about a $7 stock, went all the way up to 100, right? You're gaining 1,100% on a stock over 4 years. You're going to take that. That's absolutely amazing performance. Amazing performance. And that's still a 35% move down from today's price, right? Now, that does not mean that it's going to actually dip to that level just because I'm saying that, oh, you would be willing to accept it. Of course not. There's been plenty of stocks that have shot way further than people would ever even expect it, and they love it, whatever. But my point is to think that this stock can't go negative over the next year or two is not unfathomable. It's gone up so much, and where it ranks within all these other companies, it doesn't necessarily make sense when you look at the comparison, right? I mean, you just look at the comparison, right? You got all these companies. You go to the, where is it? Where's the revenue? Give me that revenue, right? I mean, you just look at this: 4 billion, 84, 166, 32, 47, 43, 39. Like, they do not make nearly as much money in dollar amount, and so they're gonna have to figure out something. So anyway, that's my 2 cents. Please give a like and subscribe. I really appreciate everybody, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.